All right, so today we're going to talk about how to trade stocks and predictably fatten your accounts by laser focusing on one simple setup with one page of trading rules, all in 15 minutes a day. Now, this entire presentation, we're going to go a little less than an hour, and I want to make sure this is as valuable as we possibly make this as valuable as we possibly can. So we're going to pack this full of information. I'm going to tell you exactly what we're doing. There's nothing held back. Literally, this is exactly how we trade on a daily basis. We're going to show you behind the scenes how this all works. And then if at the end, if those of you who want to work with me, look over my shoulder further and work with me, I'll give you an opportunity to do that. So my name is Kurt Christensen. I've been trading the stock market for over 22 years now, spoken at events around the world from India to the United Kingdom. And not to brag, but that alone is a reason for you to be here today and why you should lend me your undivided attention for the next 60 minutes or so. Now, the financial markets are risky, investing is risky, past performance does not guarantee future performance, of course. This is all based on historical research and data believed to be reliable, but we have no guarantee of future results will be profitable, and this is not a solicitation to buy or sell any security. So that said, let's talk about the one thing that changes everything. If you get just this one thing right, your stock trading life, your stock trading career is going to have a marked difference than to any other choice that you make in your trades for the rest of your life. Because right now is one of the very best times for expanding your stock trading tool chest, especially in swing trading. And as you'll soon discover, what's making it easier and faster and flat out better than ever is something that industry and trading experts are calling risk to return heaven, or RR heaven. Now, you may not know what that is, and that's totally fine. We're going to explain all that in the next hour. I'll prove to you that this one thing changes everything for when it comes to you taking your stock trading victory laps. And that's not all. Now, let me level with you. This is going to take some work, of course. This is going to take some time. This is going to take you out of your dreaded comfort zone, right? But wow, it is worth it. Tell me if this sounds fair. This is going to require a very reasonable time expenditure on your part, something almost anyone can find the time to do. It's not going to cost you a king's ransom in cost, not even close. And it's a system that's been getting consistent results for over 7 months now across the board for my stock trading partners, beginners to pros, no matter the age. Now, this is just something you have to commit to for, let's say a good 6 months to get the methodology down, to figure the nuances and some of the ins and outs and all of that. So is 6 months to start seeing some serious results in your stock trading more than fair? Absolutely. Now say yes in the chat if that sounds absolutely fair to you. We got John, yes. Nathan, yes. Nikita, yes. Bill, yes. Okay. All right. If you haven't been noticing, I'm going to ask a lot of questions as we go through this presentation. So as we go through, on your GoToWebinar control panel, you'll notice that there's a questions box. And if you're attending with us live, go ahead and respond in there as we go through this, just so we can make sure everybody's on the same page and everyone's following along. Now, if you have questions, go ahead and type them there in the question box as well. And we'll get to answer every single question, if not in the flow of the presentation, but at the end for sure. Okay. So as we talked about, this is one of the very best times for expanding your stock trading toolkit. And we're going to show you a real life trade to start this off. Okay. So this real life trade is on a stock you may have heard of. This stock is TSLA. So how many of you have heard of the stock Tesla? Well, I hope so, right? It's one of the most famous stocks in the world right now. Now, on Tesla, the chart we're looking at right here is a daily chart, and you can see me drawing on the chart here. What we're looking for is what happened with Tesla is it formed what we call a high tight flag, a triangle, a bull pennant. It has a lot of different names. All those things happened over on the daily chart. You can see it right here for a couple months, and then on this particular day, represented by the teal line, we bought the stock. We bought right here. And what happened after that? Well, after we bought right here, the stock went up and went up and went up and went up, and we held it and got out with some pretty amazing gains. Let's show you exactly the numbers. So we bought the stock on 11/17 for $439. Our maximum risk per share was $6.19. Now we realized a gain of over $200 per share. So that leads us to an example. We can quickly teach you one of the very, very first things you need to know in stock trading is how to calculate your risk versus reward. Your risk versus reward is quite simply, on one hand, you have what's the potential amount that you risked. In this case, we risked $6.19, and our reward was $20.20. Right here, you can see that equation right there. Is this all making sense to everyone? Or if you simplify that down, it means for every dollar we risked, we had a potential reward, which in this case it has a potential reward of $32. Okay, so with a risk reward of 1 to 32, how often do you have to be right to break even? Do I have any guesses in the chat? Let's say you have an infinite amount of opportunities presented for you in front of you, and all of them have a 1 to 32 risk reward ratio. As in, if you put them on, if you suffer a loss, you're going to lose $1. If you get a win, right, it's going to be $32. How often do you have to be right just to break even? All right, go ahead and pop that in the questions box. Make sure everybody has a chance to answer that. Well, the simple answer is 3.1%. That's right. 3.1% is all you have to be right to be able to break even if your risk reward is 1 to 32. Now, obviously, not all the trades we're going to take are be 1 to 32. I'm giving you the example to set your mind up for how this works. You don't have to be right to be able to make money in the stock market. You just have to have your winning trades be bigger than your losing trades. And we're going to show you exactly how to do that. How to find those trades where you have the opportunity to have trades that are 5, 10, 20, 30 times the size of a losing trade. So you can do this 100% without a doubt. Even if you're new to trading, you're still getting used to the idea of longing or shorting a stock. Or if you're an experienced trader and have traded thousands or millions of shares or options or futures or Forex for years and think you've seen it all. So give me a big heck yeah if you feel a bit of relief that this might be what you're looking for to aggressively but responsibly grow your trading account month after month. And if you want to hear more, go ahead and type in the questions box. Now, before I get into what we'll be teaching about in today's workshop, I need you to know that's what's happening in the stock trading community is making lots of newfound success possible for folks like Alan, Carlos, and Bill, and others of my students that we'll talk about on today's webinar, and countless others, and possibly you too. So using this system, you will see results. Here's the kind of results that you're going to see. What we're looking for is we're going to look for one simple setup with trading rules that can be explained in one page. Is that fair enough? Is it fair enough that you could explain this trading system in one page? Well, absolutely. That's, we're trying to boil this down to the absolute essence of right when a stock is going to break out, the signals that it gives off, the exact look that it gives off, the exact setup that it presents, and then we're getting into those stocks right before they skyrocket. So this setup is simple, can be explained in one page. We're going to teach you how to hold on to your winners, squeezing as much out of them as you can. We're also going to teach you how to cut your losses quickly for a tiny paper cut instead of a stomach churning, keep yourself awake at night type of emotional loss. We're going to teach you how to have a risk return ratio of 1 to 10 as the norm and a minimum of 1 to 5. So what does that mean? That means if you're going to risk $1 on every trade, just as an example, the trades that we're looking for, generally, the winning trades are going to be 10 times that amount. The winning trades are going to be $10. At the absolute minimum, our winning trades are going to be 5 times as big as our losing trades. How do I know this? Because we have proven this and done this for 7 months now. 7 months now with live students watching over my shoulder as I do this and take trade after trade after trade. And after almost 100 trades in these 7 months, guess what? Our minimum risk return ratio is 1 to 5, right? Our winning trades are in real life 5 times bigger than our losing trades. And we're going to show you exactly how we do this. We're only going to trade the long side of the market. So why would we only trade the long side of the market? Does anybody have any ideas? Go ahead and type it in the questions box if you got ideas. Alex or Jeff or Royce or Alan or Steve or Benji. I think it's Benji, maybe it's Ben or Benj. Type in the question box. Well, why would we only trade the long side of the market? Well, simply put, the long side of the market is where our edge is with this exact setup. Also, when we trade the short side of the market, it requires much more skill and much more nuance. If you trade something from the short side of the market, your potential losses theoretically are unlimited. If you buy a stock for $1, it's at a $1 price. What's the absolute worst that can happen? Well, the absolute worst that could happen is the company goes bankrupt and the stock price goes to zero, right? When you short a stock, the stock could go from $1 all the way to infinity. I mean, it's purely theoretical. It doesn't happen, but it is possible. It is a theoretical possibility. So that alone is one of the reasons why we only trade the long side of the market. And this can be traded from a brokerage account anywhere in the world, preferably one with zero commissions. And we give you the charts, scans, and indicators to run it on TOS, which is what I use and prefer, Thinkorswim, TC2000, Metastock, TradeStation, and we're also getting it developed for other platforms like TradingView and let's see, what was the last one we're working on? TradingView and Interactive Brokers. So skeptical? Well, good. I hope you are, because I was too when I was first presented with the opportunity to trade this way, and someone started showing it to me, and I thought, well, it can't be that easy. Markets are much more complicated and sophisticated than that, but they're not, and I'm going to show you exactly and prove it to you. So hopefully this is fair to you. We covered this a little bit earlier. It does require a very reasonable time commitment. We're not talking about day trading. We're not talking about being glued to your computer 8 hours a day. We're not talking about something that requires $10, $20, $50,000 in capital investment or subscriptions or black box software or algorithms. And we're talking about something that's been getting consistent results across the board, not just for me, but to the dozens of people that I've taught the system to, they are getting these same results, okay? So by getting these same results, just to put this in perspective, we're talking in the range of, just pull up the number. In the last 7 months, we've had a net percentage gain of 59%, right? So 59% divided by 7 months, we've been making right at 8% a month on our money, on our capital, which is not too bad. We're not trading anything sophisticated. We're trading stocks, we're not trading options, but 59% net gain in our account with proven trades that we've taken live in front of people. It is something you do have to commit to for at least 6 months. You have to commit to this. You have to actually do it. So these 3 steps that we're going to teach you today are very easy to follow. They have simple rules, right? And these rules kind of lead me to a kind of a side story. That's an embarrassing confession. I used to really struggle with that, and that is the whole concept of discretionary or subjective trading. So if you go on Facebook or Twitter or anywhere where traders are gathered, at the end of the day, you'll always see kind of 2 camps. You'll see people bragging about their gains and exactly how they called the market, and other people bragging about something they avoided. They said, I knew that stock was going to crash. That's why I told you, right? That's all subjective or discretionary trading. When I switched to trading using rules-based trading systems for stocks, it completely changed my life. A rule-based system is where you follow the system. Your whole goal is to follow the system and trade according to the setups it provides for you, trade according to the parameters it gives you. Now, the whole advantage of that is emotionally and mentally, it's much, much, much easier. So if you're feeling challenged, stressed, or even a little bit fearful, now this is for you. If you can follow a simple set of rules that are very learnable that we can write in 1 page, you'll be able to do this. So of course, just a little bit of a background of me, just so you know that I wasn't born working on Wall Street. I didn't go to an Ivy League college. There was no silver spoon or anything like that for me. I grew up in a dairy farming community. My family moved around a lot, but my family was originally from the area of Preston, Idaho, and I've lived all over farms and small towns in the West. And so, I went to normal public school like everybody else, went to BYU in Provo, Utah, met my wonderful wife. I have 3 wonderful kids. And, I figured this whole trading thing out really so you don't have to. And I'd have to say now life is pretty decent. I've dedicated over 22 years of my life to getting this whole trading thing down. I take every Friday off. This is something I firmly believe in, that less is more when it comes to work and all that. I just try to be efficient in my work. I take every Friday off. I travel a lot. Obviously, I didn't in 2020, but 2021, I've already been, multiple countries. Taken my wife all over the world. This is us a couple years ago in Vienna before getting on a riverboat cruise down to Budapest. This is me at some of the famous hot springs water baths in Budapest. I snowboard 15 days a year, and I wakeboard or wake surf another 15 days a year. So, you're not going to catch me in the office on a weekend in the summer. I'm going to be out, this weekend, Friday and Saturday, out wakeboarding and wake surfing. We live in the summertime in a beautiful place here in the Pacific Northwest called Spirit Lake, Idaho. I serve other people. I sometimes up to 20 hours a week, and I give away a lot of cash, not only service hours, but cash, over $500,000 so far. And I've taken youth groups all over the Northwest in places like this, camping in the mountains and experiencing the beauty that God has created for us in this world. On a professional side, I run online businesses, and I've sold over $20 million of stuff online so far. Spoken at seminars and events all over the world. This is one of the last ones I spoke at, Financial Marketing Summit in London, UK. The fall of 2018, kind of obviously not a lot of seminars going on in 2020, 2021. But, we're not a fly-by-night operation. I'm sitting right here in my corporate office here, in an office inside this office park. If you're ever in the neighborhood, please come on by. But, most of the time I'm not in the office, because on this particular day, I was trading from this chair right here. And this is on the beach in Costa Rica, just to show you kind of how portable and mobile this trading setup is. You don't require super fast internet connection or anything crazy like that. I was trading with a pretty slow internet connection, and that particular day, if I remember correctly, I made over $2,200. Closed out some very profitable trades, and spent most of my trading time looking out at the waves, and occasionally looked down at the computer, and when the trade set up, I took it. But that's what this trading opportunity gives you. If you ever happen to be in the area, our office is at 2426 South Dishman Micah Road. We've been around the block, and we will continue to be in this industry, in this market, for years to come. So that said, I want to give you the meat and potatoes of what we're going to talk about today. And that's the 3 steps to mastering stock trading using this exact setup. Step number 1, I'm going to teach you how to scan for and trade the BMWs and Ferraris of the market, and that is momentum stocks. I'm going to teach you how to trade long, looking for one very specific, very learnable, easy to identify setup. Step number 3, I'm going to teach you how to keep your risk to reward ratio absurdly high, to let your winners run and to catch your losers very quickly. So let's dive in and go over these 3 steps. So it's next to impossible to screw up stock trading if you follow these 3 steps. So Richard Dennis, if any of you are familiar with him, he was one of the famous traders behind the whole turtle trading movement. He's a famous futures trader from the futures trading pits in Chicago, started with $5,000, turned it into multi-millions. He said, there are 1,000 ways to make money in the markets. The problem is all of them are hidden amongst tons of crap that don't work. Once you get this setup down, you can go ahead and branch out to other setups, learn and discover and research other methods, but get this down first. Once you have the ability to do this, you're going to strive to get to this spot where you have consistency over multiple months, which is much better than just having consistency over weeks, which is always better than just having winning trades. The goal is to have consistency over years, obviously, and this is how you break that down. First, you've got to have consistent months, then consistent weeks, And the first step is having winning trades. So how do we do that? Well, step number one is we're going to teach you how to trade the BMWs and Ferraris of the stock market, which are momentum stocks. So momentum investing involves a strategy to capitalize on continuance of an existing market trend. It involves going long stocks, futures, or market ETFs showing upward trending prices and short the respective assets with downward trending prices. Momentum investing holds that trends can persist for some time, and it's possible to profit by staying with a trend until its conclusion, no matter how long that may be. For example, momentum investors that entered the US stock market in 2009 generally enjoyed an uptrend until December 2018. This is right from Investopedia. So in momentum investing means we're getting into stocks that are already moving. These other people may call these growth stocks, growth, momentum. They're kind of synonymous. They're stocks that have had significant price gains, significant action in the past. And we're saying, like it says here in the definition, we're capitalizing on the continuance of an existing market trend, right? We're betting that these stocks will have not only gone as high as they've already gone, but they're going to go higher. So how do we find these stocks? Okay, so here's some of the benefits of momentum investing. Number one, you have potential for high profits over a short period of time. A lot of times in this strategy, we're sitting in cash in the market. We don't have to be fully invested all the time because when we're in a stock, they're going to make big moves in a short period of time. Number two, we're leveraging the market's volatility to our advantage. We're taking advantage of those highly indecisive times when people are trying to decide where to put their money. And a lot of times they put their money into something that's already a high flyer, something that's already showed momentum, and then we're already in that stock. They're the late to the game people. We're already in it when it's poised to explode to the upside. And we're also leveraging the emotional decisions of other investors, okay? So why is this so important? Well, trading the right stock, ones that are momentum leaders, tilts the odds slightly in your favor right out of the gate, right? How does it tilt the odds slightly in your favor right out of the gate? Well, it's pretty easy. Think about it. Think of any momentum stock, any high flying stock that you can think of that's gone up over the past weeks, months, and years. On any particular day, with everything else held equal in the stock market, are the chances exactly 50-50 that it'll go down that day versus going up that day? No, it's not. There is a bias in that particular stock to continue to go higher. And that's what we're leveraging. We're tilting the odds slightly in our favor right out of the gate. This also speeds up the process of trading because since the trades will either be losers or winners in a matter of days, it allows you more compounding periods per year. Which would you rather trade? A stock that goes up 15% in 2 weeks or 15% in 2 months, right? Think about it. Which one would you rather be in? So can you see why so many experts and successful traders view scanning and picking the right stocks as critical to their progress? I mean, right here, this is a huge part of success in trading, is knowing which stocks to trade. So this is a quote from Jesse Livermore, one of the most famous traders of all time. He said, after spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It was never my thinking that made me the big money for me. It was always my sitting. Got that? My sitting tight. So what does that mean when you're a trader? That means you got to get into the right positions and hold on as they go up. But how do you get into the right stocks before they explode? Well, that's why we're here today. We're going to show you exactly how that works. So here's some more proof when we talk about momentum investing. This is from NASDAQ.com. This is proof that momentum strategies work. This is from UCLA Anderson School of Business, kind of like one of their business magazines. Momentum investing, it works, but why? After a quarter century of sprawling study, it's time to narrow the focus and settle on an explanation. From the Wall Street Journal, 5 investment trends that skyrocketed in 2020. Growth stocks, Bitcoin, options surge, and dizzying year for financial markets. When this says growth stocks, it's referring to the exact type of stocks that we like to trade. We call it momentum, but momentum and growth, same thing. So here's exactly how we find those. Here's what we do. First off, we want to scan. Now, when we say scan, what we're particularly looking for is we're not scanning by hand. We're not just randomly typing in stock tickers into our chart until we find something. Most trading platforms allow you to do, besides the charting features, which allow you to show graphically what the price of the stock looks like, they also allow you to do scanning. Scanning is where it goes through a list of stocks and looks for stocks that meet a certain set of criteria. Here is the first criteria that we want to look for. We want to look for stocks that have outpaced 90% of the full universe of other stocks. They've gone up more in the last 1 month, 3 months, or 6 months than their competitors in the last 1 month, 3 months, or 6 months. They've gone up more than 90% of their competitors. Okay, so what do we know about a stock that's gone up, had a price growth of 90% relative strength compared to its competitors? Well, it's gone up, right? It's gone up in the past 1 month, 3 months, and 6 months. We want to scan for what we call an ADR, and we'll explain what ADR is here in a little bit. But ADR is average daily range of 6%. So 6%, we're saying if the stock starts out the day at $100, there's a very likely chance it's going to end of the day at either $94 or $106. Okay, the range of that stock on average per day is 6%. Why is that? Well, slower moving stocks are going to have ADRs of like 1% or 2%. If we buy something like, I don't know, like Ford or an oil company, not an oil company, Ford or McDonald's or something like that, it's going to have an ADR of 1%. So it has, if it gets into a perfect situation, a perfect setup, we buy it, and the next day, woo-wee, we're up 1%, right? So that's why we're scanning for stocks that have an ADR of at least 6%. We want to be able to get into the stock and have a high enough volatility that we can make some decent money with it very quickly. We're also going to scan for $10 million in daily price volume, which is the number of shares traded times the price, or as a proxy for that, we could also look for 1 million shares. Some platforms don't have this daily price volume calculation, so you could also look just for stocks that have 1 million shares traded on an average day. So from each of those 3 scans, you're going to get some crossover, of course. The ideal would be that you have no more than 30 stocks appear in each scan. If you're getting enough, if you aren't getting enough, you can lower your requirements. If you're getting too many, you can tighten them. What you want to be able to do is you want to flip through these stocks quickly that are the results of your scan and see if any of them match the setup that we're looking for. I only want you to start trading lower ADR stocks. Remember, like we talked about, like the, I don't know the example we use, Ford or those type of stocks, when your account grows. If you have less than $200,000, don't trade anything less than a 5% ADR. If you have less than $200,000, you need to be in stocks that are going to move. You're going to need to be in stocks that move so you can compound your account. So that's step number 1. Step number 2, I want you to trade long, looking for one very specific, very learnable, easy to identify setup. Here's what the setup is in the criteria and the chart setup. I want on your charts to put a daily chart and a 1-hour chart. The 1 hour is just for entries. And I want you to just put some simple indicators, the 10 SMA, the 20 SMA, and the 50 SMA on both charts. What you're looking for is a clean, smooth chart that's surfing the moving averages. It's had a minor, small pullback. It goes to the 10 SMA, the 20 SMA, sometimes the 50 SMA, and surfs alongside it. The trading range narrows over a few weeks or days, has narrow range price candles, and the price consolidates and kisses an SMA. Okay, so what do we know about this? Well, we already knew from step 1 that it's gone up significantly in the last 1 month, 3 months, or 6 months. When we take a look at it, it has a nice, clean, smooth pullback, right? And on that pullback, it goes to the 10 SMA, the 20 SMA, sometimes the 50 SMA. If it's a low cap stock, don't settle for any choppiness. It should be very, very smooth. If it's a large cap, it's okay to accept a little bit more bouncing around. Here's some actual live examples from trades that we took. So this is Tupperware. So let's see, how did we get Tupperware on our scans? Well, first off, it was down at $1, and the price had already gone up. By the time that we found it on our scans, it had already gone up to $13. So the price had gone up 10, 11, 12 times, right? So almost 1,000% gain. Well, more than 1,000% gain in that time period. So that's why it appeared on the scans, right? As in it had outpaced the price growth of its competitors, of 90% of its competitors, obviously. Okay, why else did it appear on a scan? Well, it had an ADR, or active average daily range, of more than 6%, as in the price candles were more than 6% on a daily move. And look at this nice high tight flag that it formed right there. I've got it kind of set out. You can see it in that triangle. And then that white line represents exactly the price that we bought at. We bought at $13.86. And you can see right here is where we got out. Right where that red candle closed below the 10 SMA, which is the closest SMA, the 10 SMA moving average, simple moving average. Here is the setup on Kirkland, which is a retailer, behind Costco. You can see right there is the setup. You can see the high tight flag. It's come off this base. It's had a pretty serious price movement from about $1 to about $2, $2.50, so 100% gain, 100% move before we got interested. Here's one on Celsius, which is like a beverage company. A little bit different look, but you can see the high tight flag right there and right there. And we got in kind of over there. Here's one on LEDS. LEDS, look right there. Oops, I have a hard time drawing with this thing. LEDS, look right there. Look how tight it got after a pretty significant price move. It went from $4 to $12 in a few days, consolidated, surfing the moving averages, and then broke out. We bought in here and sold the vast majority right there on that close below the 10 SMA. Tilray, TLRY. You can see the high tight flag here, and you can actually see our entries. That's our entry price, and we got one exit there, one exit there. This is DDS, which is Dillard's, a department store. Over the last 1 month, 3 months, 6 months, you can see how much the price has gone up. And right in here, the price has spiked over 2 or 3 days. The price had then consolidated. It formed a high tight flag and then broke out. And we got in right in there and held it until right there. We can go on and on and on. DDD, here's another one. Right there. Right, these examples go on and on. SIG, this is one we got into very recently. This is a great little trade. So SIG has moved from, say, a base of 25 in this area all the way to a base of almost 60, right? Almost doubles. So this is the momentum that came in. This is what got it on our scanner. And it started moving sideways, and it formed this nice high tight flag. And then breakout day is right there. You can see that little teal line is our breakout price. Okay. And then on SPCE, which is the Virgin Galactic, you can see right in here is where we got entry. And here's one last one. This is kind of a bottom bounce one. The momentum for this one was coming from, it bounced off this bottom of 7. Then in 3 or 4 days, it had gone up quite substantially, doubled in price, forms a nice wedge, triangle, high tight flag, and then we got in there. So the strongest ones are going to find support on the 10 SMA. The stronger ones are going to find support on the 20-day SMA. The slower ones on the 50-day SMA. We want to buy at the opening range of the 1 hour candle when obvious range is broken. Like when it's broken outside the triangle and we're in, after the first hour the market's open, as in the first 1 hour candle, that's when we buy. So for it to be a valid trade, we want our entry price minus the low of the day to be less than the ATR, the average true range. So that brings up We have two indicators that we use that are pretty similar, but we use them for different things. One of them is ATR, average true range. The other one is ADR, average daily range. Average true range includes gaps because it includes yesterday's close with today's prices. ADR doesn't include gaps and is based on daily highs and lows. Simple way to remember it is ATR is shown with a dollar sign. ADR is shown as a percentage. That's all you have to remember. So here's more proof. Investors Business Daily, one of my favorite papers ever. Smart chart reading. High tight flag can deliver skyscraper-sized gains. From Yahoo Finance. High tight flag is a rare pattern that can deliver incredible gains. Step number 3, I want to teach you how to keep your risk-return ratio absurdly high, let your winners run, and cut your losers quickly. So your initial stop after you get in is going to be a few cents or ticks below your low of the day, not in a number that ends in 5 or 0. I want you to set your stop and go away, and don't watch every single little tick. 3 to 5 days after your entry, if you're not stopped at your original stop, sell 1/3 to 1/2 of the entire position and then move your stop to break even. If the market is choppy or the position doesn't look super healthy, sell 50% on day 3. In great trending markets or positions that look A+, then sell 33% on day 5, right? So if you're conservative, position doesn't look great, sell half of it on day 3, right? You get a lot of your cash back and you take a flyer on the rest. If you're super confident, right? This is going to go to the moon, right? Well, then just sell 1/3 on day 5 and hold on to 67%. You're going to exit the entirety of the position on the first close below the trailing 10 SMA. Right there is the rules, folks. That's the rules for this entire methodology. Let me see if I can get this to. If you follow these rules when you trade this specific setup, you're going to be profitable. You're going to make money. So let's talk a little bit more about this risk-reward ratio. And this is why swing trading is far easier than day trading by far. A lot of times in day trading, people will talk about where they risk $5 to make 1. If you risk $5 to make 1, how often do you have to be correct? Or what does your batting average, so to speak, your win rate have to be? Well, if you're risking $5 to make 1, your batting average has to be 83% just to break even, right? That's not making money. That's just breaking even and not losing money. That's why day trading is so difficult, because it's hard to find good risk reward opportunities in day trading. It's much easier to find them in swing trading. Remember, our minimum is this. We want to find trades where we're risking $1 to make 5. If we do that, we only have to be right 17% of the time to break even. And ideally, we want to find ones that we can risk $1 to make 10. If we risk $1 to make 10, we only have to be right 9% of the time, right? So this is where we're trying to be. Every time we risk a buck, we have a potential of making 10 bucks. We only have to be right 9% of the time. Can you see why this would dramatically change the way that you trade? We've got a couple questions coming up. Sid asked, can you put up the slide with the rules for number 2 again? Yeah, so number 2, the entry chart for number 2, right? We're looking for a high tight flag, something that's had a significant price movement. That's how we got on our scans in the first place. We're looking for a clean, smooth chart, surfing the moving averages, has a minor small pullback, goes to the 10 SMA, 20 SMA, sometimes the 50. And then also our entry, for it to be a valid trade, we want to enter our entry price minus the low of the day, which is our stop, which is our risk, is going to be less than the average true range. What that gives us is an opportunity to get into trades before they move a ton out of our favor. We want to take a lot of small trades but we also want to reward ourselves when we get a good entry. When we get a good entry and it's just a few cents off the low of the day, meets all of our other criteria, we're going to be in it heavy. Okay, so that's the advantage of trading this methodology. So we talked about this, step number 3. So let's talk a little bit about expectancy. So this is kind of your math class for the day. So expectancy quite simply is, what if you took 1,000 or 10,000 or 1 million of these same trades? What would we make on average? So our win rate is currently around 30 to 40% using these exact setup that I've explained to you. So let's be pessimistic and let's use 30%. Let's say that we can get winning trades 30% of the time. Our winner should be 5 to 10 times the size of our loser. So let's use the worst case, let's say 5 times. R is your risk on each trade, okay? A lot of you probably heard other traders talking about R. Anytime they talk about R, they're saying, well, what's your risk when you put the trade on? And this is kind of the missing ingredient when people talk about trading. They say, oh, I put on this fantastic trade and I made $5,000. Well, we have no way of knowing whether that was a high risk reward trade or not if we don't know what their potential risk was. If their potential risk was $1, right, and then they turned it into 5,000, that's an unbelievable trade, right? That's a fantastic trade. If their risk was 100,000, if they had $100,000 at stake and they made 5,000, risk reward wise, that's a terrible trade. So that's why we use risk. That's why we use R, so we know exactly what's the worst that could have happened on that trade. So in this case, we're setting up the equation. Our expectancy is 0.3. So 30% of the time we make $500, plus 70% of the time we lose $100. What does that come out to? That comes out to $80. So every time that we risk 100, on average, we don't lose the 100, we get $80 back, okay? So if on average, if you risk the possibility of losing $100 in each trade, and over time, each trade nets you $80, as long as your expected value is positive, right? As long as this number is more than 0, in this case it is, obviously it's $80, and you use proper risk management, not putting too much capital risk on any particular trade, you're not betting the farm on any one trade, your account is going to grow over time. Mathematically, scientifically, that is just simple fact. So how many times do you want to take that same trade? Right? I just gave you the example. How many times do you want to take that same trade? This one right here. Going in, you have a 30% chance of being right and making $500. You have a 70% chance of being wrong and losing $100. That means if you take the trade enough times, on average, you're going to make $80 every time you take the trade. How many times do you want to take that same trade? Go ahead and answer in the questions box. Sid says, as often as possible. Tom said, a few. Jill said, 1,000, right? I mean, the correct answer is as many times as you can. As many times as that comes up, you want to take that trade because that's how you make money. That is an edge. That is a mathematical edge that is going to play out over time. So when are these setups available to trade? When do we find these exact setups that we're talking about? Well, generally, we're going to find them if we look at a chart of the QQQ, which is the NASDAQ Tech Index, which is represented by the ticker symbol QQQ. This is the growth sector. You could also use something like IWM, which is the Russell 2000, but I generally stick with the QQQ. Anytime on the QQQ that you have the 10 SMA and the 20 SMA pointing up, you're going to have good trades generated. For example, during this time period, anytime that the 10 SMA and the 20 SMA are in the wrong order or pointing down, right? Kind of like during the COVID crash right there, until about, it looks like until about end of April in the COVID crash. And then this whole period of last year was a fantastic gift for everyone who was trading this methodology. Many people were up 200, 300% from April or May of last year to the end of the year. Until about, when was that? September, October was a little bit rocky for a month or two, but you're going to find that time and time again. That's all you have to look for to know when is the season for the system and when it's not. When the 10 and 20 simple moving averages on the NASDAQ index, the QQQ, are pointing up and they're in the right direction and they're underneath and supporting the price, there's going to be these momentum stocks are going to appear on your scans. Now, what happens in the times like this, like when we have that big COVID sell-off right here to right there? So what do you do in that time period right there? Well, what will happen is in the system is you're going to get stopped out from your positions, right? You're going to be in positions that either don't work or you get profit stopped. We get profit stopped a lot on these positions, and then you go check your scans, and no new candidates are going to come up, and it's that simple. You're just going to wait in cash while everybody else is losing their minds and losing money in the market. You're going to wait for the conditions to correct themselves. The conditions are always going to correct themselves. The conditions are always going to get better. And when they do, you'll notice on the Qs that the 10 SMA and the 20 SMA are pointing up. You'll notice that all of a sudden in your scans, you're going to get tons more opportunities, and you'll take your cash that's been sitting on the side and you'll go back into the market. It's as simple as that. So take a vacation, do whatever you want. Don't worry. You don't have to be in the market 100%. To be able to make fantastic returns. So let's show you some recent trades. This was an entry on 9/15 last year, for a 17% gain on Zillow. Very common to have, 10, 15, 20, 50% gains. I think the record gain we have is, I think, right at 200% gain, but very common to get 5, 10, 15, 20% gains. So we had a 17% gain on Zillow. Apps was a 26% gain. Fiverr was an 18.91% gain. Neo, 19% gain. You can see trade was right there, represented by that white line. DNLI, 22% gain. Kirk, this is that Kirkland Products one. You can see this one has our exact entry price represented by that teal line, 11.26. 56% gain. Rig, 15% gain. Tupperware, folks, of all things. Would you expect us to be talking about Tupperware as a momentum or growth stock? But look at how it follows the rules that we talked about. So Tupperware in the whole COVID sell-off got down to $1.50 or something like that. Over the next couple months, it went all the way up to about 13 bucks, right? So 10 times. And then it sets up perfectly in this nice high tight flag that you can see right there. And we entered on the break of that high tight flag with the correct risk reward ratio, and we held all the way to here, right? 80% gain on Tupperware. So hopefully you've enjoyed our time together. I've given you the exact setups, the exact scans, showing you exactly some of the trades that we've taken using this methodology. I've taught you the mathematical science behind how to profitably swing trade, how to escape the rat race of day trading and all that and being stuck to your computer. Hopefully you've enjoyed our time together so far. I hope you found this information valuable, and I hope you can at least try to implement some of this stuff over the next 7 days. And I hope you know way more about trading than when you first got on our call today. Now, do you, be honest, of course, I promise there's no wrong answer. Do you feel a bit overwhelmed perhaps and curious about how to start? I can practically see you nodding that you might be a little bit overwhelmed at this point. So just as a recap, here's what we've covered today so far. I've given you exactly how to scan for and trade the BMWs and Ferraris of the stock market, momentum stocks. I've given you the exact setup to look for to trade one very specific, very learnable, easy to identify setup known as a high tight flag. And I've also taught you how to keep your risk reward ratio absurdly high, let your winners run and catch your losers quickly. Now, it's going to be hard, almost impossible to create lasting change in results in your trading just based on the information we've given you so far. You can do it. People have done it. One measly webinar isn't really going to go about creating the lasting change that you need in your life and your trading that you want and deserve. And today's training, frankly, is the tip of the iceberg, right? but you'll love what I've got for you next. While what I've given you today was incredibly valuable, as you've all told me, I'd like to share with you how to go further and what I have for you next. So if you've said to yourself along this, hey, I want to learn how to do this. I want to learn how to do this alongside Kurt. Well, good. You're in luck. The first choice that I had is I could share with it I could share with you what I've taught you so far, part ways with you, and hope that on your own, some of you can make a go of it. Set up your scans, learn how to identify the setups, and kind of do it by trial and error based on what I've taught you. My second option is I could take a more active role and responsibility for your success and create an ongoing, growing, and mutual rewarding relationship. I'm going to give you some shortcuts and support systems and additional insights that go even deeper than what we've talked about today. And so hopefully the choice for you is a no-brainer that you want to hear about this and you want to hear about the options to move forward. So if you want to hear about the options to move forward, go ahead and give me a Y in the chat. Get some Y's from Steve, Mike, Tim. Okay, getting a lot of Y's in the chat. Fantastic. So this is what we call our stock trading science mentorship, right? Here's exactly what you'll receive today. The retail price of this, what I charge every day on my website, if you just went onto my website today, is $3,995, which is an unlimited lifetime mentorship. Never expires. You never pay an ongoing renewal fee. You never pay for an upgrade. You never pay for any of that. Everything is included for this price. Here's what you get. It's a small price to pay for the profits from maybe 1 to 5 good trades. If you have a $20,000 account, which most people are, starting somewhere in that range or a little bit higher, if you take 1 to 5 good trades, set those profits aside, and that pays for your education. Every trade you take after that for the rest of your life, and every trade that you teach your family members and friends how to do using the same methodology, obviously the profits are yours to keep. This is for a lifetime of great trades, because this is the type of methodology that's timeless, that's always going to work. This is the way the markets have trended and traded for 100 years, well, 100 plus years, and will for another 100 years. Here's what you'll receive today. We're going to give you the complete training. We're going to give you the 3 fully recorded training sessions covering the 3 core aspects that we've already covered: the scans, the setup and entry rules, your position sizing. All of that's already produced and already in the membership area that you'll get immediately upon joining. You also get the software, how to set this up on your exact charting and execution platform. That's every scan, indicator, and setting you'll need completely set up and running on your trading platform. The trainings we talked about, okay, that's a $3,000 value for the software. Remember, we've already talked about it includes the setup for Think or Swim, TC2000, let's see, TradeStation. We're working on TradingView. We're working on Interactive Brokers, and we also have, let's see, we have a couple others, Metastock, and a couple others like that. So not only do you get the training and the software, that's easily a $3,000 value. It costs us way more than that to produce it and get it ready for you. And that's yours for use anytime that you want, day or night, 24 hours a day, 7 days a week. You'll get this exact setup. You'll have your watch list here on the left-hand side, right? You can see our 1 month gainers, our 3 month gainers, our 6 month gainers. This is what it looks like on a daily chart. This is what it looks like on a hourly chart. And you can see down here, we have our ADR and our ATR. You can see the volume in there. And you can see these yellow lines here are the moving averages. So everything that you need to execute and take these trades is basically a click away. You also get our Slack group. Our Slack group is our daily trading chat and notifications of setups, active trades, and Q&A from members and moderators. Okay, so just imagine a group text. That's what this is, a fancy group text. The fancy group text where every day I get on and say, okay, here's what I'm looking at today. Some days we obviously don't take any trades, some days we do, but it's all there. And you can ask questions, you can contribute, you can post the things that you're looking at. And that's something that we're on almost every single trading day. Obviously, we're not on every single trading day, but most trading days, we're on there, and we're going to give you exactly, here's my current positions, here's where I got stopped out, and you'll see us live in real time, kind of you looking over my shoulder, you'll get exactly what I'm trading. Now, we're not an alert service. I'm not just going to give you a blind alert and you just follow without learning how this works. I'm going to explain as we go exactly why I'm taking this trade. So you're going to not only learn, but you're going to see in real time as these trades unfold. So that's our Slack group. That's easily a $2,000 value. You get access to that immediately. And that's, you get to consult with me and plus our other moderators and other members on there, an unlimited amount. It's pretty cool. You get our trade journal. That's an updated Google Doc that's showing all of our moderator trades along with our complete results. Trust me, this took me dozens of hours to get all the calculations correct, to get it all programmed in. You can just make a copy of this Google Doc and enter in for your own trades. You can also monitor trades that we have and see exactly what we're doing on a monthly, weekly basis, and it keeps all the trade statistics and all that kind of good stuff. You get our monthly live customer support webinars. That's a value of at least $1,200. We do these every single month. It's typically on the fourth Monday of every month. We'll get on a live webinar just like we are now, and we give you the opportunity to ask as many questions as you want, and we don't leave until every single question is answered. So it's really an opportunity for you to get not only group coaching, but also individual coaching to get every single question you have about the system, trades, your individual trades answered. You get unlimited access to personal support. That has an unlimited value. Of course, I have a staff and they handle all the, kind of the customer support issues, logins into the membership area, that kind of stuff. But if you have a trading question, it's most likely going to be answered by me. So you basically have unlimited access to me, someone who's been trading profitably and has made millions in the market over the past 22 years. So you get the training worth at least $1,000. You get the software worth at least $1,000. You get the Slack group. You get the trade journal. You get the monthly webinars. You get the personal support. Well, this total value is easily worth over $8,000. Now, remember, this is a one-time fee. You're not paying this monthly or annually or anything like that. And our total price for that is $3,995. And this is all backed by solid evidence and real world results. Like we mentioned, we have brokerage statement proof of the returns that we've entered using this methodology since December 1st of 2020, when I started selling this to students. We're already up 59%, and frankly, it's been a little bit on the slow side. We normally be up 100 or 110% by now, this far into our first year. We're 59% in a relatively slow market. And this is backed by solid evidence and real world results of this exists. That 59% we can document and show the brokerage statements of every single trade, right? We show you our most recent month's closed trades, our money in the bank, show the model portfolio. The protocols behind this are thorough, tested, and backed by real world results. And, I haven't even covered some of the other additional bonuses that we give you for free, but just to give you some more proof that these trades work, here's some recent portfolios in TOS in various accounts. Here's 19% gains on all kinds of stocks like DNLI, Kirk, Penn, Rig, Snap, Tesla. Here's another account, 17% gains. Another account, 7.45% gains. Here's another account. We traded TAN in that one, which is a solar ETF, and Tesla, which I'm sure you're familiar with, 22% gains. Futu and Square, 14.48% gains. Everything from Futu, GBTC, which is the Bitcoin ETF, Kirkland, Snap, TAN, Tesla, right? I mean, this one had an open profit of $3,000, open profit of 14.48%. And it just goes on and on and on, right? 22% on that account, 15% on that account. Now I'm going to show you one crazy screenshot. Now this is not my personal account. This is another colleague. He's trading this same strategy just to show you what can happen in a good period in the market. If you get into the right positions at the right time and do what Jesse Livermore says, right? Sitting on his gains. Look at this. Those are unrealized profits. That means that, they're open profits that are sitting there waiting to be collected when you close out the position. 3.8 million, right, in unrealized gains. Now, by the time he closed them out, I'm not exactly sure if he closed it out at 4 million or 3.5 million, whatever. That's not the point. The point is he got into the exact same trades that I'm going to teach you how to get into, things like Z, which is Zillow, Fastly, DDOG, Livongo, NVIDIA. All these stocks are going to be stocks that you're going to become very familiar with. And we're going to teach you exactly how to get into these same positions and do the same thing. Now, granted, 3.8 million in unrealized gains, you know, you would only have to do that how many times in your life to have a decent trading career, right? Plus, we're going to show you every single closed out trade, winners and losers, since we opened the doors to this in December of 2020. That's what we've already talked about. It's actually higher than this now, but at the time I made the screenshot, 560% net gain, 36% win rate, average win of 26%, average loss of 5%, our risk return ratio of 1 to 5.2, an expectancy of 1.23. So that means if you took all these trades with $1,000 of risk, every time you took one of those trades, your return would be $1,230 on average from each trade. Now, and remember, we're only winning in this particular case 36% of the time to get those. So you're going to take whatever that is, 64% of your trades are going to be losses, right? That's how powerful trading this methodology is. And we give you a copy of this trade log so you can follow along. You can see our monthly returns. You can see monthly return there, monthly return there. So we want to make this as fair as possible. So I'm going to give you an ironclad 2-part performance guarantee. And this is very, very simple. Part 1, I want you to go through the entire trading, participate, start trading live or in demo mode, as in you don't even have to risk any money. You can trade in a paper money or a paper account. And if you don't love it, get a complete refund anytime within 14 days of ordering. That's pretty simple. The second part is learn the system. And actually, I'm going to actually even extend this because I was doing this for a different promotion and I want to make sure that we give people enough time. We're going to make that 90 days. So you got a 90-day money back guarantee that's conditional. That says if you go through the training and you actually take some action, take some trades, learn enough to play some either real trades or trades in a fake paper money account, you can get a complete refund anytime within 90 days of ordering. Just show us what you've done and we'll part our ways as friends. Part number 2, learn the system, use it for a full 6 months, execute all the trades as they come up. If you don't at least make back 10 times your system investment in profit, I'll personally work with you for free until you do. That's mano a mano, me and you on the phone, text, whatever, to make sure you're getting in the right trades with the correct timing, with the correct methodology. So either way, you love it and you make good money with it, or you hate it and you get your money back. I don't think we can be much more fair than that. I mean, today I've taught you all about risk return ratio. And in this case, I'm giving you a 0 risk. There's absolutely no way that you can lose money, right? And your reward is immense. And I don't think I can be much more fair than you within that. So walk with me into the future. So let's say that you decide to go ahead and get on board. You claim the stock trading science mentorship for yourself today. Picture your life just 48 hours into the future, right? Just 48 hours from now. Now you can see a brighter future. Your stock trading losses and emotional turmoil from having up and down weeks and months and indecision on what's a good trade had all but vanished. Even though your trading isn't anywhere near perfect, it's way more fun and it still only takes you about an hour a week. You've arrived, you've made it, and that feels fantastic. I remember in my own life when I finally turned that corner years ago and I got to that exact spot, it's just liberating because you know that you have so much potential in front of you and you've kind of put some of those barriers behind you. So I want to treat your bank account kindly today. We've talked about this being a bargain at $3,995 because this is not some one-on-one deal in a hotel seminar or an expensive black box type of thing where you'd pay $15,000 or $20,000 or something for an auto trading algorithm that then breaks down in a couple years. Or unlike the total retail price that we've talked about of $3,995, which is very reasonable since this is worth well over $8,000. I know I can do you one better. So I can give this whole thing to you, lifetime access, unlimited access for $1,495 if you sign up by midnight 4 calendar days from today. You got to make a decision, and I'm going to give you 4 days to do it. So to claim a spot in the mentorship, here's what you need to do. You get the full online trading, which is $1,000 value. You get a full indicator and software package, which is $1,000 value, the daily Slack group, the trade journal, the monthly customer support and success webinars. You get personal support. That total value for just $14.95. It's a one-time payment with nothing more to pay ever. All the improvements, all the additional training, all the additional indicators for different platforms that we contribute, you get all those for free. Just as a member, you've already paid for it. You're already in there. You'll just see them show up in your account. So here's how you order online. Order online right now by going to stocktrading.com/order. And that'll pull up the ability to pay for $14.95. You can either pay by credit card or PayPal. And for some reason, if the PayPal option isn't working on there, let us know. We can give you that by PayPal. Huge advantage of paying by PayPal. You don't even have to pay today. Most of you in your PayPal account will have what's called PayPal credit. You can go ahead and pay us with PayPal and make no interest payments to PayPal over the next couple months or so. You can have this all the way paid off, obviously even before you're charged a dime of interest. Or of course, you can do the same thing using your regular credit card at stocktrading.com/order. Now, what if you're on the fence? For most of you, I probably answered most of your questions. Just go ahead and purchase. You know you want it, go ahead and get in. $14.95, it's a no-brainer value. What if you're on the fence? You can book a 15-minute call with me directly. To do that, just go to stocktradingScience.com/call. Now, this is not, some crazy thing where I try to sell you a $10,000 or $20,000 package. You book a 15-minute call with me, and we just kind of go over where you're at. If it fits, you go ahead and buy it. You make that decision on your own. No pressure. This is not some high pressure anything at all. We'll just see where you're at, see if this is fit. Or if you have a couple questions, go ahead and book a 15-minute call. I'm just going to tell you that most people after we talk, they go ahead and sign up, they get their questions answered, and they go ahead and purchase. So those are your two options. I can't imagine anyone that's been on this webinar this entire time. We've taken an hour and 10 minutes at this point. It's not either a full yes, and you should go to stocktradingScience.com/order and order immediately, get immediate access, or is at least a solid maybe. And that's, if you're a solid maybe, go ahead and book a 15-minute call, stocktradingScience.com/call. Okay, this mentorship offer at the discounted price of $14.95 expires at midnight 4 calendar days from today, no exceptions. Now, I want to give you all of this. I want to give you these exact setups. I want you to have a trading setup like I have right here. I want you to be standing right there looking over my shoulder, right? I want you to be this guy right here, right? Looking over my shoulder as I take these trades on, the stock here or the stock here or the stock there. That's what I'm giving you, is the opportunity to be right here in my office with me, basically every day that the trading is open, for life, for $14.95. That's it. So questions and answers. How much capital do I need to get started? I'd highly recommend, that you have somewhere in the 10,000 to 15 to 20,000 range. However, we do have many members who get started with a minimum capital of about $5,000. With $5,000, you need to be a little bit cautious, of course, and you make sure that you're divided up into at least 5 different positions. You'd only put $1,000 into each position. But we have plenty of members that get started with that. What kind of computer do you need? It doesn't really matter. I use Mac computers. All the trading software now works on Macs perfectly fine, but any computer with a reasonable internet access is going to be fine. Brokerage account trading software. I personally use Thinkorswim for both executing my trades and my charting. Other people chart with somebody else and then execute with somebody else. That's perfectly fine. Whatever you set up is going to be fine. The least important part is the executions, as in where the trades are actually executed. For the charting, we have the charts available currently, right, for Thinkorswim, TC2000, Metastock, TradeStation, and we're working on TradingView and what was the other one? I'm always forgetting though. TradingView and Interactive Brokers. Okay, so that's the real important one. How does the guarantee work? I want you to go through the training. I want you to just either start making trades live or in a demo account. I want you to put forth good faith effort that you tried, right? Who's the most likely to succeed in this method? Who's the most likely to fail? Most likely to succeed is someone who has been around the block a little bit, who is what you'd call an intermediate trader, or even advanced trader, and that can just take this and run with it. They're going to be the most successful. The next most successful is going to be someone who's a beginner but doesn't have any preconceived notions about all these other garbage that they want to add onto their charts. So someone who's willing to just try it and make it work and be simple about it. How long does it take to learn this and get good at it? Like I said in the very beginning, give yourself 3, 4, 5, 6 months to get this. Once you've been through all the seasons, you've been through some times when the trades are coming hot and heavy versus some times where it's a little slow, you're going to kind of get a feel for the rhythm of this and how it works. Why doesn't everyone trade this way? I think there's just so many lies in the industry that, day trading and all these other things are so super profitable. This is more profitable. This is getting into position at exactly the right time and sitting on it, right? By sitting on it, I'm not talking like years or months or anything like that, but I'm talking you're getting into position and you're going to ride a rocket ship sometimes. Like we have a Tilray trade that went up almost 100%. We were in, let's see, some other Bitcoin related trades, Riot and Mara that were up 100%. One of them was up 200%, in a couple weeks. So remember, we have our 2-part ironclad performance guarantee. We're going to give you 90 days on that instead of just 14. Pretty simple. Go through the trading, start trading live or in demo mode. If you don't love it, get a complete refund within 90 days. Just show us your trading log of what you've done. Part 2, learn the system, use it for a full 6 months, execute all the trades that come up. If you don't make at least 10x your system investment and profit, I'll personally work with you for free until you do. So either way, you love it, make good money with it, or you hate it and you get your money back. I don't think we can be much more fair than that. So again, to claim your spot in the membership, most of you are going to want to go right here, StockTradingScience.com/order. That gets you in for $14.95, either using credit card or PayPal. Remember, if you use PayPal, you can use the PayPal credit, or book a 15-minute call with me directly here, StockTradingScience.com/call. Okay, so just in proof that this isn't just me, that I'm not some genius trader, that I'm the only one in the world that can figure this out. Here's some other students that are in the program, right? So this is Brad Murray, up 97% overall in 4 months, 185% on the Mara trade. 1,000 thank yous for explaining the setup in a very logical, easy to understand way, as demonstrating in real time exactly how it works. I started with 0 trading knowledge, and with your help, I'm now up 97% in 4 months. Brad had never placed a stock trade before he started this program. Okay, he's a brand newbie. This is from Devin, up 103% in 6 months, got 26% on apps, 28% on Viper. He says, I first started studying with Kurt in March of 2020. Started out paper trading as he recommended, and I had a steep learning curve. Since I went live, I'm up over 103% in 6 months. My biggest winners of the month were apps for 26 and 28% on VVPR. I have a full-time job that doesn't allow me to trade all day, so the swing setups he teaches are at a pace I can manage throughout the day despite my busy work schedule. Or Greg P. from Lansing, Michigan. He turned $1,000 into $101,500 in 5 years on one trade. Great. Granted, this isn't this exact setup. This isn't the stock trading science momentum trade that I taught him, but kind of give you the perspective that I've been around a while. I know what I'm doing. He put up $1,000 and it's now worth $100,500 as of December 2020. I still can't believe it. The single most profitable trade I've ever done. One trade, never messed with it again. Thank you, Kurt. John Spear, 282% on one trade. Ben Piper turned $2,000 into $65,000 over 4 years, 3,150% return. He says, I'm no pro trader. Kurt has taught me so much about trading and following his trend, following and breakout ideas. I've turned a small stake of $2,000 into over $65,000 in a little over 4 years of swing trading. So again, to claim one of your spots, you got to go right here, right now, StockTradingScience.com/order, or if you're on the fence, book a 15-minute call, StockTradingScience.com/call. What we'll do on the call is going to answer any questions, make sure this is right fit for you, and then you go ahead and sign up or not. Okay, so we've been on about an hour and 20 minutes. Want to make sure everyone has a chance to get into the program. I'm going to answer any other remaining questions that have come up. This is from Sid. He says, do the scans get run together at one time, or you run each separately and see which stocks overlap? The scans run at the same time, and you can just see which ones overlap. We also have a way to actually run them together, so you don't necessarily have to run 3 different scans. But yeah, this is from Jim. What about options? We do have some options of information available. Not all the stocks that we trade are going to have options on them. However, for the ones that we do teach you in the training, in the advanced section, exactly how to trade stock options on these stocks as well. From Bill, he says, what's the sign up link? Okay, let me make sure we have the sign up link on the board, stocktrading.com/order. Here's what you're going to see. Here's where you need to go right now, stocktrading.com/order. We'll bring you to this order page, the Stock Trading Science Unlimited membership, discounted price from retail, $14.95. Has your Ironclad 2-part performance guarantee. And for some reason, it's not showing the PayPal option right now, but it will if you're watching this, not with us live. But if you have questions about PayPal, just let us know. Okay, hope to see all of you in the membership very soon. This is the absolute only way of trading that I'd recommend to everyone in the world, because it is not day trading, allows you to compound your money very quickly. And like we've mentioned, we're up currently 59% in 7 months with proof. I mean, we have documented trade proof, 59%. And frankly, it's been a little bit on the slow side. It's very normal, very normal for this system to average 100, 150%, 200% annually trading this exact methodology, trading these exact breakouts. So join right now, stocktrading.com/order. We'll see you on the inside. If you join with us today, we can see you on and hopefully get you some trades tomorrow if the market cooperates. Get you on the membership and get you through the training and get you on the Slack channel. So thanks everyone for being on. You've been a wonderful audience. We will talk to you very soon. Thanks everyone.